Hello everyone, we're just gonna wait a couple more minutes before we get started. Thank you for joining us and thanks for taking your lunch to join this webinar today. Just a couple more minutes and then we'll get started. I hope you're enjoying the beautiful rain that we've got going on the beautiful fall day. It's getting pretty gloomy today, unfortunately, but I think it's a good day for a webinar. All right, I think we can just kick off and then let people join in as they come in. So I'd like to introduce I'll start with doing a land acknowledgement. So the Richmond Chamber of Commerce operates on the traditional territory of the Musqueam First Nation. They have lived on this land for millennia and we're grateful that we can gather here today. And I would like to acknowledge the traditional territories that you may be joining us from as well. So before we begin, I'd like to go over some housekeeping items with you. Everyone will be on mute, but we encourage questions today, so you can submit your questions in the Q&A tab at the bottom of your screen. If you have any issues or any comments, you can write that in the chat as well. And then we will end the webinar at 1 p.m. sharp. But before then, we'll try to get to as many questions as we can. Again, if you run into any problems, please pop that into the chat. And now that the housekeeping is out of the way, I'd like to introduce our presenter for the day, Joey Chow, founder and CEO of Meliora Business Administration Inc. Joey Chow founded Meliora to help as many business owners as possible to run profitable businesses. After realizing that merely maintaining books and filing tax returns wasn't her true calling, Joey shifted focus from accounting to transforming clients' businesses and lives for the better. By leveraging numbers, Joey helps small business owners ensure their ventures are healthy, self-sustaining, and capable of generating significant returns. Please join me in giving a warm welcome to Joey Chow.
Thank you, everyone. Thank you, Alina, for the introduction. Let me share my screen and let's start our presentation today. Okay, can everybody see my screen? Okay, so today we are going to talk about your business, own a machine, not a job. So let's get started. So first, we are going to talk about why most businesses fail and the difference between a business that is a machine versus a business that is a job that you happen to own. The three sources of money for every business and how to get back control of time and money from your business. And finally, the 16 drivers that drive revenue, profit, and cash flow in every business that you need to watch like a hawk. Okay, let's go ahead and get started. So why most business fail? This is from Statistics Canada. It shows that 10% of the business fail in year one, 20% fail in year two, and 50% fail in year six. Think about it. Almost one out of every two businesses is gone by their sixth birthday. All that time, energy, money, gone. All of those hopes and dreams of the owner, gone. All the owner is left with is a ton of debt and the realization that they must go back and get a job. So what's the reason? why most businesses fail. They lacked money. Amazon made their first profit in 9 years. How can they do that? Because they have investors invest a lot of cash in the business, and in 9 years they finally made the first profit. So every failed business will still be in business today if it was able to have access to money. So the first poll question, if money isn't an issue, how would you spend money in your business?
You should be seeing the poll on your screen now.
Yeah. So you can pay off that, you buy a car, equipment. Okay. Oh, pay off that. Great. Thank you, guys. So let's continue. So money literally solves every problem in business. If you have a marketing problem, money allows you to do more marketing and hire marketing professionals. Have a management problem, money allows you to get better managers or allows you to hire people so you can manage instead of working in your business. Have a down market, money allows you to weather the storm. Have a seasonal business, money allows you to make it through to the next season. Have a sales problem, money allows you to improve your product or service and hire more salespeople or better salespeople. So the list is endless. The point is, money solves every problem in business. We always joke around like, if a problem can be solved by money, it's not a problem. So now money can come from 3 sources: debt, owners' investments, or from the business. So let's talk about debt. Debt can be credit cards, bank loans, or vendors that you buy and then you pay later. So essentially you owe them the money for the inventory or service you acquire. Owner's investment, your personal savings. That's how you usually get started. Or you sell a piece of your business, so sell your shares, your stock to another person, and that person will become a shareholder of your company. And from the business, this is money that the business creates. And I think this is the best way to make money. It's revenue, less expenses, less taxes, less debt payment, less customers who don't pay us, less vendor payments. So everything, in other words, it's all the cash that comes in, less all the cash that goes out. Whenever left over is we are looking for. So that to beat the survival rate, you must get good at making money. And of the 3 ways to make money, there's a clear winner. You must get good at making money from the business. Why? Some debt is good. So if you use the debt to buy an equipment that generate income for you, or you buy inventory which will convert into money for you, then that is a good debt, which means something that will produce a return on investment. But relying on it is not sustainable. A business that relies on debt to survive will eventually go out of business. And its owner, most likely you, still must pay all the debt off. Also, a business that cannot support itself and must rely on outside debt or investments has either one of 2 things going on. One, there's a chance of making a lot of money down the road, like Amazon, in 9 years. Or those pharmaceutical business or software tech businesses. So they need capital money, borrow money from. Or the business is not working and cannot survive on its own. So most businesses, unfortunately, fall into the second category. So the bottom line is your business must get good at making money. So How do you do that? The answer lies in turning your business into what I call a money-making machine. What do I mean by money-making machine? It's doing what a machine is supposed to do to make money. If the machine is not doing what it's supposed to do, then like all machines that are not functioning properly, you need to determine the root cause and fix it so that your machine is running at peak performance and doing what it's supposed to do. So let me use an example of a washing machine, so which everyone is familiar with. The purpose of a washing machine is to wash clothes. It's made up of multiple parts. And if it fails at doing what it's supposed to do, then there is a reason why. If you find the reason why and fix it, then your machine will get back to doing what it's supposed to do, wash clothes. So it's the exact same thing with a business. Your business should be thought of a machine. Its purpose is to make money. Otherwise, it's a hobby or a charity. It's not a business. It's made of multiple parts. If it fails at doing what it's supposed to do, make money, then there is a reason why. If you find the reason why and fix it, then your machine will get back to doing what it's supposed to do, make money. If you can get your business to make money, you can use that money to hire more people or better people, to do more or better marketing, to improve the quality of your products or services, hire experts to help you grow your business, hire better management, expand locations, buy more equipment, vehicles, supplies, inventory, pay down debt, take time off because you can afford to pay someone to take your place, and take some money out for yourself. I like the last part. You really need to reward yourself because you are working so hard. So the good news is that, like a washing machine, every business is made up of the same parts. And each part has a hand in helping the machine do what it's supposed to do. To get your business to make money or more money, you simply need to get familiar with these parts so that you can spot the parts that aren't working properly and do something about it. We are going to talk more about the parts in just a minute, but first, let's look at what happens if your machine isn't functioning properly. If money isn't being generated from the machine, your business, and you don't or can't pour your own money into it, and you don't or can't take on more debt, then you will have a business that will eventually go out of business at worst. And you will have a business that will constantly struggle to grow at best. Either way, you will be consistently stressed out, overworked, and underpaid. And at the same time, most owners are afraid of their business failing for two reasons. Number one, they depend on the business working. Their business must work. Their families depend on their business working. Their employees' families depend on their business working. They have so much time, energy, and money invested in their business already. And number two, they can't go back to a job. They can't go back to being employed because most business owners are unemployable because they don't want to work for someone else again. They've tasted freedom and don't want to lose it. Ironically, most business owners own a job and they don't even realize it. Now it comes to machine and job. Most business owners own a job, not a machine, a very stressful, low paying, and high demanding job. But most owners don't realize this until after they've started their business. In fact, most business owners start or buy a business because they want control, which is the opposite of a job. They want control of their time. They want control of how much they make. Ironically, because most businesses struggle to do what the business is supposed to do, the owner loses control that they wanted in the first place. They must work more in the business because they can't afford not to. They must work for less. Effective hourly rate goes down, lower prices due to competition. And at the same time, most business owners who started a business because they want control started it because they were skilled at a craft. For example, a HVAC tech starts an HVAC business. A dentist starts a dental practice. A marketing expert starts a marketing firm. A chef starts a restaurant. A blank starts a blank. You get it. Because of this, the business owner inadvertently starts a business that's more like a job they own. But unlike a job, there's no steady paycheck. But unlike a job, there's no one to guide the owner. They are the boss now. So in the absence of a steady paycheck and guidance, the owner does what the owner knows how to do. They rely on their skills. A HVAC tech spends most of their time doing HVAC things. A dentist spends most of their time doing dentist things. A marketing expert spends most of their time doing marketing things. A chef spends most of the time in the kitchen doing chef things. And the other functions of a machine struggle. Things like getting clients, making sales, ensuring pricing is optimized, knowing what assets to buy, knowing when to expand, knowing if marketing is producing a return on investment, understanding numbers, hiring, firing, managing employees, and on and on. And so the business struggles. The business struggles because the business owner is wearing all the hats. The business struggles because the business owner ends up having to do all the things that they don't necessarily like or they are not necessarily good at. The business struggles because the business is run like a job. It's not like a machine, especially not like a money-making machine. Eventually, even their craft begins to suffer because the business owner is overwhelmed and stressed. They bought themselves a very stressful, a very expensive, and very low-paying job. The business owners have the worst of two worlds. They have a job without a steady paycheck. They have a business without the control they really want. So what's the solution? Now here's poll question 2. Do you guys know your numbers or how your business is doing? Is there anyone taking care of your financials and tells you every month how your business is doing? Okay, good. We have some support in your business, which is good. Okay, good. 1/3 have accountants and P&L every month. 1/3 of you monitor my costs every month. Good. On top of that, on top of your business, it's good. And some of my team look after the books, which is good. So the solution is to turn your business into a machine. And specifically, you need to turn your business into a money-making machine. So like all machines, your money-making machine is made up of multiple parts. If your machine fails at doing what it's supposed to do, then one or more of the parts are not at peak performance. Your job as the owner of the machine is to ensure each part of the machine is running at peak performance. In just a few moments, I'm going to review the 16 parts of every business that you need to ensure I'm running at peak performance. But first, I keep saying money-making machine. Let's get crystal clear on what I mean by that. Like we discussed, all machines have a purpose. Your business purpose is to make money. Put it simply, you want a business that makes money so you can do three things. Think about why you started your business. So your business makes money so you can take money out for personal use, because initially you put a lot of personal savings into your business. Now it's time to take out to compensate yourself. Or you use the money to grow your business, to buy inventory, to open a new location, or you use it to increase its value so that it can be sold one day for top dollar. So let's look at it one by one. Other than control of time, making money is what most people really want from their business. And you need a machine that allows you to take out as much as you want. So you can use this money to fund a better lifestyle, go on vacation, pay off personal debt, send your kids to college, and on and on. Next, use the money to grow your business. Money literally solves every problem in your business. Money not only helps you stay in business, but it also helps you grow your business. Lastly, use it to increase value so you can sell it. Most businesses are sold as a multiple of cash flow, usually between 2 and 4. So if your business create 100,000 each year on average, then it can be sold for between 200,000 and 400,000. That's how you make money as well. If you want to sell your business for top dollar, you must increase the amount of money it creates. That's the money you can create in the future. So as a recap, you want a business that makes money so you can do three things. Take money out for your personal use the money to grow your business, and use it to increase its value so it can be sold one day for top dollar. That's why you want to make money in your business. So let's now talk about how to turn your business into a machine. Here are the 16 parts of your machine, because if you look at just the machine itself, it's very hard to understand. But if you break it down to 16 parts, then you can tackle one part or two parts at a time. So as I mentioned earlier, each business is made of 16 these parts. Your job as the owner is to ensure each part is running at peak performance. So each part's job is increase one of three areas, only these three areas: revenue, profit, and cash flow. I believe some of you may have this question in mind: which one is the most important? So revenue is what you sell. Profit is what you sell, less your expense. So whenever you receive an invoice payment from your client or customer, that money is not all yours. And cash flow is what you keep. Increasing cash flow is more important than increasing profit. Increasing profit is more important than increasing revenue. So think about this. Your bank account doesn't lie. Whether you are 6-figure, 7-figure, multi-7-figure business, at the end of the year, what matters most is how much cash in your bank, right? So as an example, let's say that last month your revenue is 50,000. Your expenses were 30,000. So your profit was 20,000 last month. Just let's say for the simplicity of mathematics, the taxes is 4,000, and you pay that 3,000. You also withdraw 6,000 for yourself, and you didn't get paid by a customer, which means they owe you 12,000 for an invoice. Now you get a negative 5,000. That's a negative cash flow, means the incoming cash is 5,000 less than outgoing cash. And this money must come from somewhere. Either that your investment or the business bank account itself. So your job is to get this number as high as possible each month. You sell as many products and services as possible. More importantly, get this number as high as possible. You have to make a profit. If every time you sell something, you lose this money, it's not good, right? You want to make money. And lastly, even importantly, get this number as high as possible. So every month, your incoming cash is more than your outgoing cash. So every month you have leftover, and every time you have leftover, that is something we want to achieve. So here I'm going to introduce you 16 parts of your business. If you improve these 16 parts of each revenue, profit, and cash flow, you will improve your business. Okay, and the first one, let's talk about revenue. Revenue parts are drive revenue. Leads are people who have been made aware of your business, your product, but they are not yet ready to buy. Conversion rate is how many people you can convert from leads to customers, paying clients, customers. Retention rate is how many customers you can keep them so they come back and buy from you again. And purchase frequency rate is how many times they buy from you, and average transaction value. So I'm just going to introduce you everything, and then I'm going to give you some explanation and example. Okay, so parts that drive profit: cost of sales, marketing expense, payroll expense, overhead expense, and some other income or expense. Parts that drive cash flow: days sales outstanding, days inventory outstanding, sale or purchase of assets, days payable outstanding, using or paying down debt, and shareholders' investment or dividends. So you will receive a list of each of these parts along with clear definitions and examples via email after this webinar. Okay? So just watch out your inbox. Let's talk about it one by one. Leads. Leads is number of ideal customers that have been made aware of you. So if you can get more leads, you will indirectly or indirectly improve your revenue. Conversion rate is the percentage of leads that become paying clients. So let's say you have 100 leads. If you are converting 10%, if you can convert 15%, then it's highly likely you will improve your revenue. Retention rate is the percentage of customers who come back each year. So because you already spent the money to get leads, but those people already bought from you in the past, you don't have to spend additional money to acquire them. They are already your paying clients. So how do you do that to keep them coming back, keep coming back? Purchase frequency is the number of times a customer purchases in a year. So let's say you did one service to the clients, so that's once a year. How can you think about another way to maybe sell them a monthly maintenance, or very commonly now is subscription? So you make them buy more, then you will increase revenue. And lastly is the average transaction value, is the dollar value of each purchase a customer makes. So think about this. You have what we call opportunity cost. So if you are a service business, you spend an hour on a 1,000 job versus a 5,000 job, your opportunity cost is 4,000. So you miss that opportunity to make additional 4,000 on a job because you spend the same hour but your revenue is different. One is 1,000, the other is 5,000. Or if you are a product business, you have a different a line of products. What you want to do is you want customers keep buying the expensive ones. That's how you raise your average transaction value, which will result in higher revenue. If you have any question, please put it in the Q&A section, and we will discuss it later. Next, let's move on to profit. So first thing is cost of sales. This is how much it costs you to provide the goods or service to each sales transaction. So as I mentioned in previously, whenever a customer pays you an invoice, that payment is not all your money. So you already paid a portion of that money to your suppliers or service providers. That's cost of sale. Because if you don't serve this customer, you will not incur this expense. That's cost of sale. Okay, the cost. And next is marketing. That's the total cost of marketing measured as a percentage of revenue. So marketing essentially is to drive leads, right? You advertise, you tell people, hey, I'm doing this, and then people get attention. It's hard to get attention right nowadays, but how do we make a sale? We want people to know our products and service, and then make them interested, and then tell them how our service and product and service can solve their problem, so they can convert into a paying client. So marketing expense will drive your profit. And payroll, that's the total amount of payroll not already included in cost of sales. So maybe you have a subcontractor to do a job for you. So that's included in cost of sales. But you also have office admin who take orders or process invoices. Their payroll is also an expense in here, which will impact on your profit. Then is the other operating expenses like rent, insurance, or those staples, supplies. And lastly, other income. So maybe an insurance payout, or maybe last time during COVID, a lot of government subsidies. Those are other income. Okay. Lastly, cash flow drivers. Days sales outstanding. This is the number of days it takes for you to collect cash from customers. I was just talking to a lawyer friend yesterday, so I was asking them the question, the poll question number 1. If you have money, what would you do? He told me if he had money, he will hire additional person in his office just to chase for invoice payment. So I say, there you go. That's something you need to work on. You either hire somebody to help you chase it, or you need to automate it, automate the invoicing process, or ask clients or customers to pay deposit, to pay 50 or 30% deposit first. Now you have the cash, use their cash to buy supplies, hire subcontractors. Don't use your own money upfront to do that. That will impact your cash flow. That's what I mean by cash flow. So remember, cash incoming and cash outcoming. Okay, so if you can request something from your customer upfront, that will help to improve your cash flow. Days inventory outstanding. This is the number of days to sell your inventory. So this only applies to goods, products, business. If you are a service business, this is not applicable to you. So for those of you who sell products, you have to keep an eye on your inventory. It's an art to determine a stock level. You don't want to overstock, then all your cash is stuck in inventory. You don't want to understock those top selling items, because now the customers are not happy because they don't something they want is sold out. They are not happy. You don't want that. But this is definitely something you need to think about it. And sale or purchase of asset that will impact your cash flow, because let's say you want a new truck. My old truck is not working anymore. You need cash to buy, or maybe you finance it. But financing is that you need cash to pay that, right? Or if you have an old equipment, no longer use it, then sell it to have some cash on hand. Don't make it sit idle on the side. Next one is days payable outstanding. That's the number of days it takes you to pay your supplier. So usually we pay suppliers, we buy things using credit card. So it gives you 30 days. So sometimes you have a relationship with a supplier, you can negotiate a 45 days or 60, even 60 days term, so that you can manage when I need to pay them. So the longer, the better. But you don't want to ruin your relationship, because whenever you want something from them, you want them to give you the priority, give you the stock first. So this is another driver which will impact your cash flow, because you have to use cash to pay your suppliers. And next is debt. So when you apply for a new debt, you increase cash. But when you pay down debt, your cash decrease. So be careful, as that should be only used to purchase something that will have a return on investment, as we have already discussed previously. So that's that. And shareholders investment or dividends. So when you put money into your business, that's investment. Or if your business makes money and you are entitled for a dividend, so dividends are cash dividends. There are other type of dividends, but you always want to have cash to reward yourself. That's your return on the investment you invest in your own business. So that's all the 16 parts. So now look at your business from a different perspective, not just a business, but revenue, profit, cash flow. Every part affects your business. And if you improve just one part, assuming all other parts remain the same, you will see an improvement. Definitely, you will see an improvement in your business. And however, if we improve two or more parts, you will see a dramatic improvement in your business. Imagine you increase your revenue and you decrease your profit, decrease your cost. What it means, you have more profit, you increase your profitability. So imagine if you improve all 16 parts, your business will become a money-making machine beyond your imagination. So this is how you transform your business. And here's a poll question 3, the last question. If there's nothing holding you back, which drivers do you want to improve for your business in the next 90 days? There's nothing hold you back. Nothing. What would you do?
You should be able to see the poll on your screen. I'm just gonna give a couple minutes for everybody to answer the poll. And I just want to remind everyone that we'll be answering questions at the end, so please feel free to ask any questions in the Q&A function at the bottom of the screen. And Joey will be happy to answer all of those towards the end of the presentation. All right, just a couple more minutes and then we'll end the poll. Okay, seconds, I'm sorry, not minutes.
Yeah, just imagine nothing holds you back. Nothing. What would you do?
Here we go.
All of them. I love it. I love it, guys. You are the best. All of them, of course. So transform your business. Knowledge is power if we apply it to solve problems. I hope you gained some knowledge, a different knowledge, a different perspective of how you look at your business today and apply this knowledge right away to fix any parts in your business, and then you can transfer your business into a money making machine and you enjoy running your business. So but I understand it's not easy because most business owners are not necessarily numbers people, and money, cash flow, and the 16 parts of business are all numbers. And most business owners understand they need to know their numbers, but they are not exactly excited about poring over data to understand their parts and determine which ones need improving. But I am, and I'm passionate about it. So if you are watching the recordings, here's my contact details. You can email me or call me if you have any questions about these 16 parts. Welcome to do that. Now, I want to offer a free 5-day challenge, a business clarity challenge to all of you today. After this challenge, you will understand what is not working in your business, whether it's revenue, profit, or cash flow. You will understand which drivers require your immediate attention, and I will help you identify the root cause, and I will suggest corrective actions to fix it. So after the 5-day challenge, I will tell you what is not working and what exactly to do, and you can decide if you want to do it to fix the problem or not. So, and you will say, is there any catch? No catch. It's free, totally free. Just give me a review if you got value. If you got value, if you think, oh, this is not helping me anything, so it's okay. So if you want to accept this challenge, you can scan the QR code and send me a message for details. Thank you, guys.
Thank you so much, Joey, for such an informative webinar. I know I learned a lot from it. We have a couple comments and a question in the chat.
Sure.
So Mary Hamble said, very good information. Thank you so much, Mary. I appreciate that you learned something today. And she's asking if we get a copy of the presentation. We will send you a PDF, and we can also attach the slides as well to that. If there's any more questions, please feel free to pop that into the Q&A as well. I have a couple questions too, so I'll ask those in the meantime. So are there any misconceptions that business owners have that you think have about failure that you think actually leads them into failure?
Misconception. Okay, so there's one business owner who owns a bike store, and then he thinks that there aren't many leads. He thinks there aren't many leads to his store. That's why he implemented all these marketing campaigns and advertising to get leads. And then that's what he thought until we talked and we looked at the data and realized it's actually not the leads, it's conversion. His sales guys cannot convert, or many people come to the store and look at the bikes but they cannot make a decision. The sales guy is not knowledgeable or cannot close deals. So I wouldn't say misconception, but sometimes what the business owner thinks is a problem is not actually the problem. So we still need to look at data to identify and clarify if this is the problem.
And stay away from making assumptions.
Yes, yeah, they feel like, or a client, I asked her, do you think your business is making a profit? She said, yes, we are paying tax. That's why we are making profit. But actually, she's not. She's not making money. Yeah. So
Absolutely, that answers my questions. If anyone else have any questions, please, again, feel free to pop in. I'll just ask one more question. For businesses that feel stuck in that owning a job model, what are some of the initial steps you recommend they take to sort of stay away and move towards more of a money making machine.
Money making machine. This is a good question. So the step, I wouldn't say step one. Step zero is always have a clear understanding where you are at right now. Are you doing everything, those admin work or doing the marketing work, or are you maybe not doing marketing work? What did you spend time on? Or so the first step is step zero is just understand how you are running your business right now. Look at how you spend your time and look at all the tasks you are doing. And then the step one, next step is to just think about it. Where do you want your business to be in 12 months, in 3 years, in 5 years? Because if you have no target or goal in mind, you are just like driving without a destination and just burn fuels. You don't know where you are going. Then the life will, or your clients will drive you to where they want you to go. So I had another lawyer. I asked him, what is your goal? He said, I've never thought about it. Jobs just throw at me. Oh, do this and can you do this? Can you help that? Oh, can you do this? I was okay, I can do that. Then sometimes he's like, I'm frustrated because I don't want to do those small paying jobs like 15,000 jobs, but I want a big case. Then I say, nobody knows that. You have to tell people you are expert of doing the injury case, you are expert doing divorce case. You need to tell people. So people will, whenever people have problem, they will come to you. So if you are frustrated and you don't know why you are doing this thing, you need to talk to somebody. Talk to, I don't know, talk to your accountants, bookkeepers, anybody who understands your business. Because if you talk to your friends, your family, your spouse, they may not understand. That's why I think many clients told me that I play a very important role because I understand their business, and I can ask questions to get them thinking, oh, where do I want to go? And how do I want to spend my time in my business? How do I spend my resources on growing my business? So they know where to go. Knowing where to go makes you feel good because every day you wake up, you have a purpose, you have a meaning, you have a target to achieve, which makes you good.
Absolutely, wise words, and sometimes it just takes one person to ask that question to really hit a nerve in your brain and say, "Well, yeah, I never thought of that." Thank you again, Joey, for such great information. I'm sure everyone had a great time. Again, we will be sending everything over after the webinar, and thank you so much for taking the time to join us for today's Lunch and Learn. Before we part for the day, I would like to remind you of our upcoming event. So tomorrow we have exciting all candidates roundtable. It's a little different from debate this year. We're doing Richmond Center and Richmond Steveston candidates at 12 p.m. to 1:30. So unlike a debate, each candidate will introduce themselves, listen to your concerns, and share their thoughts and response. And chamber members have the exclusive opportunity to engage with the candidates in those debates. Everyone else will be watching those through our live stream on Facebook. So we hope that you can join us tomorrow. On Thursday, we have our exciting Business After 5 at Pathways Clubhouse. They are organizing this in honor of World Mental Health Day. So we hope you can join us there as well. And then again on Friday, October 11th, we have the Richmond Bridgeport and Richmond Queensboro All Candidates Roundtable, 12 p.m. to 1:30. And that is all our upcoming events for the week. Once again, thank you so much for joining us, and I hope you have a great rest of your day.